Good morning, ladies and gentlemen, and welcome to the show. Today is Wednesday, the 28th of April, 2021. Glad to have you guys here. Now, post Bretton Woods, they established a system in here. With Saudi Arabia's help. Kissinger went over to Saudi Arabia and after 1971, and they hammered out a deal where you could only purchase oil from Saudi Arabia and OPEC with US dollars. And this was called the petrodollar. And it was like a loose peg. The dollar was loosely pegged to oil. It wasn't directly pegged to oil, but if you couldn't buy oil with anything else but US dollars, it gave them a hegemony over the whole system. And this standard has stayed in place. It is still in place, the petrodollar, but it's being eroded. And, I'm going to tell you, the United States was the only country on earth during this period in time that could take their worthless fiat currency. It gave them an enormous privilege to be able to take this worthless fiat currency and buy real goods and services and real commodities with a currency that wasn't backed by anything. But because it was a petrodollar. And so they run trade deficits. Okay? And, this is held in position for a very long time, considering what's going on. The United States doesn't produce anything anymore. A lot of our factories, well, I shouldn't say we don't produce anything. We do still have factories, but compared to the amount of goods and services that we used, we're a consumer, completely in a consumer economy. On-demand consumer economy. And so what's happening is our currency, the world reserve currency, now has become like it's creating debt to the entire world. A debt and credit cycle that's extended to the entire world. In other words, every dollar is associated with debt and credit. The flip side of a dollar is the fact that it is actually debt. And so this whole system's starting to come apart now. And so what's happening is Biden is going to come along and they have a new proposed tax on capital gains. This is going to quicken things. It's going to speed things up because investment, they don't want to pay 40%. Imagine you make any profit at all, you're going to pay 40%. This is going to be like rats deserting a sinking ship because, in fact, the whole world economy is tied into the US dollar, and the whole thing now is starting to sink, starting to list and starting to sink. We are on the Titanic. And they're going to do some amazing maneuvers to try to keep this ship upright. Things that you might not never expect. Like I'm expecting that in their desperation, in the next number, probably within the next 6 months, I'm expecting them to try to do something like Titan. Just like this capital gains is an effort to do something, an effort to try to bring back the level of the debt. And it isn't going to work. It's just going to drive investment away. And it's going to increase spending. And it's going to increase inflation. But still, they have this thing where we need to do something. Our ship is sinking. We need to try to fix this giant gaping hole in the side of the ship somehow. We need to do something, sort of thing. That's what stage we're in right now. Everything that they're going to try to do. Lighten the load of the ship. I don't know. Whatever efforts that they try is not going to stop this ship from sinking. It's just too big. And in fact, their efforts might make the whole thing sink quicker. We got a limited amount of time, guys. Because it's such a big ship, like the Titanic, they were on deck, and a lot of people didn't realize it was sinking. When the ship starts to list or tip over sideways, then it's obvious to everyone that the ship is sinking. But in the first initial stages of a giant ship sinking, you don't know it's sinking It's taking on water, it's sinking, but you don't even know it's sinking. But the United States, I'm here to tell you, the whole thing is going to carry the whole world down with it because it's such a big ship. But there's a big, enormous error in our money. And it's the way it was put together back in 2014. This is like a debt time bomb. Anyway, let's get into the markets now. And let's take a look. I'm going to tell you guys, this is the most interesting thing that there's ever been. What's happening with this ship sinking, with this whole economy that's going to affect the entire and impact the entire world. It's the most interesting thing. That even though it's happening in such slow motion, that it's almost like watching grass grow at times, you know. But nevertheless, you know, it is happening in real time. Let's get in there and take a look at the charts. Let's open up the charts right here and take a look at what's going on. We'll take a look at the silver price today. It's $25.97. It's down 28 cents. Can you believe that they're able to suppress the price of gold and silver so well? But they got such a good system in for suppressing the price of gold and silver because they don't actually trade gold and silver. What they're trading is if you took a piece of paper and you scribbled 1 million ounces of gold on it and started trading that. You're not trading gold, you're trading a piece of paper that says gold. This is basically what they're doing. They're creating these slips of paper that says like 10,000 ounces of silver on a slip of paper, and then they make a big heap of those papers, and then they trade those papers back and forth, which has nothing to do with real silver. Same thing with gold. And, you know, they've got it up to, like, amazing amounts that they're trading of these paper slips that doesn't represent the real underlying gold and silver. It's many, many times more than the real gold and silver that actually exists. And by doing it this way, they're able to make it... What they're trading is paper, not real gold and silver. A lot of people don't know that. They think that they're trading actual gold and silver. And what's happening is slowly it's being eroded so that it's being a separation, so that it's being shown that the gold and silver is real gold and silver, and the paper is real paper. And how is that shown? With what's called premiums. So when you want the real thing, you're going to have to pay a premium over the paper price. This shouldn't be allowed. None of that should be allowed, really. You know, they shouldn't be allowed to trade derivatives of an underlying asset, because it's just exactly like the whole banking system set up that way, guys. They don't have your money in the bank. You go into the bank and you see that big vault back there, the door half open and everything. And that's all of it's for show, to make you think that, hey, you know, these guys have got all my money back there. All of this is digits on a computer screen. That's all your money is. It doesn't exist in the real world, no more than Bitcoin does. And in fact, it's less credible than Bitcoin, because their ledgers and everything aren't as exact. Bitcoin, the ledger, keeps track of everything. It's called the blockchain. They don't even have a blockchain. All they got is all these banks set up, and they got all your money in digital form on these banks and stuff, and they don't even have their ledger. I mean, the system could all melt down. Nobody would know who owns what. Honest to gosh, it could. If the system melts down into a deflation, nobody would know who owns what. It would just... Once the margin calls start to go out, it would just be executed across the computer back and forth so fast. It could just freeze the system and nobody would know who owns what. And in fact, I think they've already went through a mini version of that. And they didn't tell anybody about it. Back during the repo crisis, I think that's what they were doing, is they had some sort of a little thing that went through the back end of the financial system and froze everything. And they didn't know who owns what, so they made good on everybody. I think that's what the repo crisis was all about. I think they had some sort of a little meltdown in the upper echelons of the financial system. And they just kind of kept it on the QT and kind of repaired it with trillions. just pumping the money out there to making everybody whole again. You know, but the same thing could happen on a massive scale, and a deep freeze to the world's financial system if they let that deflation go too far, and it starts to go into margin calls everywhere. It's a very, very dangerous system we have now. It's not a stable financial system. It's a very dangerous financial system, and it's like they're playing with fire with this whole thing. They don't really know exactly. We're completely in uncharted territory at this point in time. The world has never experienced a worldwide hyperinflation. It's all of this stuff's new. So we don't know exactly what's going to happen as we progress into the future. And everybody out there thinks everything's just fine. And they go, oh, we're getting over the virus and stuff, and the economy's starting to pick up, and everything's fine. They don't realize that behind the scenes, the people that are really in charge of the levers and wheels are scared right now. They are scared stiff, and they don't really know exactly what to do. Okay? So we got silver today, down 29 cents. Okay, let's take a look at gold. Gold is $17.73. It's down $2.60. Looking at cryptocurrency, it's been up and up and up. But I told you guys a couple days ago, you know, when it was really going down, 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 I told you the guys this isn't over yet. I told you guys I see Bitcoin probably setting new highs, you know. But then I think Bitcoin's going to get chopped in half. I think the cryptos are going to get chopped in half if the Fed does a tightening. So watch out for that, guys. If you're into cryptocurrencies, watch out for Fed tightening. 54,800, I think it is today on Bitcoin. You got to really watch out for Fed tightening because it'll have a tremendous adverse effect on the markets, and it'll have a tremendously adverse effect, I think, on cryptocurrencies. I think it's gonna gold and silver. I think is gonna ride it out because they're already on the bottom. Where are they gonna go? You can't push them down much more. Like silver costs about $20 for the all-in cost for a silver coin. 1 ounce silver coin is about $20. So how far down can you push it before you go below mining production cost? And if they go below mining production costs, the mining production will fall off so greatly they won't have enough for industry. So they're trapped with silver and gold, you know, but the market's got a long way they could fall, you know, and so does cryptos. Cryptos has got a lot on the line because it's just underwent a huge bull market for a long period of time, you know, and it's probably going to be making new highs and stuff. If the Fed decides to tighten rate in that moment, it could get knocked in half, Bitcoin. So say Bitcoin's at 75,000 or 70,000. Say it's $70,000. Could get knocked down to 35 if that happens. But what's on the other side of that? Because the Fed's not going to be able to tighten. They're just not going to be able to do it. They'll start doing it. Yeah, it'll go along good for about the first week. Well, everything crashes. And then they'll have to reverse. You know what's going to happen when they reverse gears? Then we're going to see crypto go back up again. We're going to see, everything's going to start to go back up instantly as soon as they reverse. But then they'll never be able to try it again. They'll never be able to tighten. And, you know, them trying to pay off the debt and everything by raising the capital gains tax and everything else and raising taxes, why don't they just leave things as they are and just go ahead and print it all? Just print everything. They're going to have to go that way anyway. They might as well just start up the printers and just create endless amounts of currency units. You know, this just dragging things out and trying to fix it is not going to work. You can't fix this. It's broken. Completely broken. The only way to fix this is to go back and make money again instead of currency units. Okay. We're moving on here. We're going to take a look at the Dow Jones today. It's down 130 points. If we take a look at crude oil today, it's at 63.75. It's up a little bit. Crude oil's starting to get kind of warm there, guys. Starting to go up price quite a bit. That reflects on the dollar too. You know, gold and silver and crude oil are the three biggest things that reflect on the dollar. And if they're going up, means the dollar's being worth less. Those three things. Move index today, 60.15. The move index has been going along sideways for a while. I'm not even going to look at it too long because it's not doing anything. But we got the bonds is starting to creep up again. The U.S. 10 years at 1.64 and the U.S. 30 years at 2.3. And 1.8 basis points up for the U.S. 10 year and 1 basis point up for the U.S. 30 year. I'm going to tell you what, I think these are going to creep up. So at the end of the year, I think the U.S. 10 year is going to be somewhere around 2% at the end of this year. Let's take a look now at the U.S. dollar index, 90.81. And the dollar's just started to fall just now. Boom, look at that. It's going down right as we speak right now. It's falling. And it's falling quite fast. Wonder if something's happening within the financial system right now. It's causing the dollar to fall like that. Anyway, listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.